Okay, now that you have figured out how to download the model and you've got it downloaded, now we're going to show you how to quickly get it started. You want to be in the screener tab for the most part. This is where you'd call it the meat and the potatoes of the model. This is where we're going to get the income statement information that's important to us, our balance sheet information, our cash flow, and take a quick look at our total shareholder return. We also choose in our screener tab which valuation methods we're going to use in terms of our enterprise value to revenue, EBITDA, EBIT, free cash flow to the firm, total assets, or the market capitalization to revenue, net income, and common equity. So I like to start with enterprise value to EBITDA. If you have a preference, take your pick. I like enterprise value to EBITDA. Initially, we start with a 15-year historical and a 10-year projection. We can go all the way to a 20-year projection. I like to take a look at the previous 8 years and project the next 8 years so you can make those changes. If the cell is gray, like these ones are, like this one is, then you can make changes in those cells. Okay, so Walmart is the first company that is in the model. Let's see if it's been updated to the current daily stock price. I've just retyped in WMT, the ticker symbol, into cell C4. So the model is now going on the internet, grabbing all of the data about Walmart that we could possibly need to look at all the 15-year historical financial data and make a 20-year projection. The model is taking algorithms to look at the most recent trends to make the most accurate predictions about the future. And we're also taking a look at what the analysts are saying and utilizing their estimates in our projections. If you are just getting started with this model, I suggest using a big company like Walmart to test to make sure that it's running good on your first time running it. You know, Walmart and Apple, Microsoft, Amazon, Google, these are companies with a lot of information that the model can grab, and it's easy to understand what their operations are just because we all know about those big companies. And so with Walmart, it looks like it's changed price, so $68 is its current trading price, and we're getting a low of 64 and a high of 79 based on our enterprise value to EBITDA. And the free cash flow to equity is giving us an $81, and that's just the basic discounted free cash flow to equity method that is standard across the industry. We just put that in there so you could utilize it as a reference relative to what we believe to be more accurate ranges, and that's an enterprise value to an EBITDA valuation method. So in column E, we're taking a look at all of the 8-year historical. Since we chose 8 years, this is giving us a breakdown of the revenue, annual growth rates, the gross profit margins, the operating expenses, depreciation, EBITDA, EBIT, degree of operating leverage, interest expense, net income, earnings per share consensus, quality of income, which is a huge things to look at, return on assets, return on equity. And then our balance sheet items are cash turnover, accounts receivable, inventory days, PP&E. I won't go through all of them, but you get the picture. And then, of course, our cash flow items. Column E, 8-year historical, as mentioned. Column F, 8-year projection. Okay, so F is what we are projecting is going to happen. Column D is where we can make changes to those projections. So with Walmart, we're projecting over 8 years that it will grow at 1.9% annual growth rate in revenue. Maybe we think that should increase. So we increase our 1 to a 2, and that increases our revenue to 3.9% growth rate, which in changes the value. 1 is the baseline. So 1 is the standard 1.9%. If we think it's going to decrease, we go lower than 1, maybe 0.5, and now it's growing at 1%. If we type in a 0, then we will assume 0 growth in Walmart, and of course their share price will be changed accordingly. So when we make changes in these columns, in the column D, it's actually changing the projection as well in your P&L projection or your balance sheet projection or your cash flow projection when you make changes in column D. And then of course you can also make changes in those other tabs. But this is just to get you started on the screener tab, to get you used to using the model. If you have any questions, please let us know. Thanks for viewing.